Hey there, I hope you're having a great week. It is May 6th, year of our Lord 2022, Friday, and this week has been a crazy week in the market. By the way, this is an official communication to BayRock clients, so you should have received this video in an email. Below the video, there will be a link to a page at BayRockFinancial.com where you will find hopefully everything that I reference in this short video. But I wanted to reach out because it has been a crazy week in the market, and you'll notice next to my face somewhere I'm showing you the S&P 500. I've mentioned this to you before. Most of my clients know that when I say the market, what I'm thinking of is the S&P 500, the 500 largest companies in the United States. That is the S&P 500, and it turns out to be the largest 500 companies in the world doing business around the world. So that index is the most focused on index on the planet. And when we have weeks like this, I'm looking very closely at moving averages, at support and resistance. So when you look at this chart, you're seeing what I'm looking at. I'm looking at the S&P 500, and you'll notice those moving lines. That's the 8-day, the 20-day moving average, the 50-day, that's that thick purple line, and then the big thick red line is the 200-day moving average. So you'll notice that the S&P 500, the market, tends to have a lot of trouble once it's below those moving averages. It has to break through, we call that resistance. It has to break through that resistance in order to get to highs. And if it doesn't, it pulls back to lower lows. But then there are below those moving averages, there are some support levels. But as you can see in this chart, when I expand out to a 3-year and a 5-year chart for the S&P 500 and the rest of the market as well, you'll notice that if we break this support, we could be headed for much lower lows. And there's not a lot of support beneath where we are now other than the support that we've been hitting again and again. So if you look at the chart, you'll see that we've been in a range up and down. Here's what I want to do. Here's what I want to talk to you about. Here's what I'm going to do with my portfolio. I'm waiting for a nice recovery bounce. I don't think we're going to go to all-time highs anytime soon, but I do think we're going to have a good relief rally at some point. And when that happens, I'm going to transition all of my accounts to be in half cash. Now that's more cash than we normally would carry in your portfolio. So one thing I want you to just kind of refresh you on is how we manage portfolios. So if you look at, again, next to my face, you should be seeing the BayRock portfolios with a number next to them. That number, the BayRock 40, the BayRock 50, the BayRock 60, and so on, correlates with your risk number. So that would be the portfolio I would recommend based on your risk number. So if you're not remembering what your risk number is, click the link below and you can refresh that. But I really want you to think about my recommendation, my proposal. For most people, depending on your situation, I think it's time to become much more defensive, and that's why I'm going to have cash. That's an extreme move, but as you know, let me remind you that typically over time, regardless of what your risk number is and regardless of which portfolio you fit into, when we have extreme highs in the market, I try to take some risk off, save some of those profits, and so I might move you. Let's say, for example, you're like Billy Bullbear and your number's 57. Instead of having you in a BayRock 60 portfolio, when we reach extreme highs, I'll bump you down to like a BayRock 50 or maybe even a BayRock 40. In 2021, we had 68 new all-time highs. I don't think we're going to have that in 2022, but in 2021 we did. In 2020, we had a nasty little bear market that lasted for about 5 minutes. That was COVID. So I have no idea if we're going into an extreme bear market, but if we do, I will be looking at these signs, these moving averages. I'll be watching these charts, and I'll be prepared to do something even more extreme than going to have cash, and that is to push a button and transition my portfolio to the BayRock Bear portfolio. That involves using very risky instruments. They're called leveraged ETFs and inverse ETFs, and that's what I'll be doing in my tax qualified accounts. But in my taxable account, I'll be using options, and I'll be using margin so that I can sell stocks short or sell ETFs short. That's how you make money in a down market. And I would like to pay close attention. This is going to be a lot more intensive work for me over the next who knows how long, but I'm going to be doing it for my accounts, and I'm offering it to my clients as well. This will require that we have a meeting. If you like the idea of having a more defensive portfolio, meaning we go to 50% cash next time the market has a nice little relief, and then we wait to see if the market's going to go up from there or down from there. And then I'm asking, if you're interested in doing this strategy, you'll have to trust me to push the button for your account the way I'll be pushing the buttons for my account, which does involve more risk. Even being half in cash involves risk. If you look at this chart, if you look at the chart of the S&P 500, you see how high it's gone, and if we're in cash, we miss out on those highs. So again, look at the charts, look at the comparisons, click on the link below. If you have any questions, if you want to meet and talk about your portfolio, let's do that. But I wanted to post this video just to let you know what I'm thinking, what I'm looking at, and what I'm preparing to do with my own account. So I hope this helps. I'll be looking forward to hearing from you if you want to take some steps, and I'll be reaching out to folks individually as well. But this is an important email, an important communication, and I hope you will let me know your thoughts. Thank you very much for watching this. I'll see you next time.